Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Looking at the tech sector, we're still seeing normal healthy consolidation. We've got lower wicks, bulls buying the dip, very contained considering where we came from. Bulls are still in full control. Looks like we're revving up, taking a breather, and looking for continuation to the upside. So we're going to be watching very close for a break of the high of the past 2 days, 54.85, 54.86, a little bit of a double top. Break those levels and we're looking at a new all-time high. If we do see further consolidation and break the low of this consolidation at this point, 54.56, if we break that, then we are just looking down at the lows of each day as support levels on the way down. There's a couple gaps down here, but those lows, each level, we'll be looking at 54.48, 54.25 on the way down. Very tight range so far this week, very small. The market's seeing the same thing, and really it's just normal sideways healthy consolidation. So at this point, bulls will take sideways days. After you see a huge day or a huge run to the upside, if you don't pull back significantly, that means that solid support has been built on the way up and the bulls are still in full control. So we will be looking for continuation. We are looking for new all-time highs in the S&P 500, and it will take the tech sector to help that out and see new all-time highs itself. So Apple is an inside bar on the daily time frame, and we have a tightening range forming. We have a higher low and a lower high and an indecision candlestick. If we get a break of 145.81 tomorrow, we're looking bearish. If we get a break of 147.14, we're looking up at the all-time high. That's as simple as inside bars can be. There's more in-depth strategies, but really just the superficial basic version is looking for a break of the range of the inside candlestick to indicate the direction of the day following it. So the weekly time frame for Apple, potentially, if we get a bear break from that inside bar, it will be a bearish reversal candlestick on the weekly time frame, and if we get a bullish break, it will not be. So that's pretty much as basic as it's going to boil down to. We've got the high at 148.09, and we're watching to see if the bulls can eliminate a bit of this upper wick that shows some profit taking. If we do close weak and see a bear break on the daily, we will be looking at a bearish reversal inverted hammer, and we'll be watching. The must-hold support right now is 140.06 to maintain the higher lows on the weekly and to keep the bulls in full control. Facebook on the daily time frame, also some healthy consolidation, and this is coming after a bear reaction to earnings. Pretty much an ideal bear reaction that the bulls could have had. We have a gap down here at 147.75, but we found support at 148.72, and the bulls bought that dip. We filled the gap back to the upside, and considering the bull move we've seen here, the fact that the bearish reaction to earnings only did that much of a dent to the move to the upside, I'd say it was about 25% of the move to the upside taken back on a bearish reaction to earnings. That's an ideal scenario. And our new support, 148.72, is a key level to be watching. We'll see if the bulls can get some follow-through momentum and head right back towards that all-time high. Weekly time frame is a bearish reversal candlestick rejecting from the upper Bollinger Band. Second week in a row, we've rejected from that Bollinger Band. And this indecision, it's a spinning top. And we're going to be watching, if it's a doji, it'll be a bearish reversal candlestick. Pretty much it's more likely than not that we will see a bearish reversal weekly candlestick. And the question will be, are we going to confirm it next week with a red week indicating further pullback? That will be important to be watching. So we'll certainly keep on top of it and keep checking back in. I appreciate you watching, and we'll see you over the weekend.